this is Dan Ferrisi, Editor-in-Chief with Commercial Integrator, and welcome to AV Plus, the podcast for the commercial AV integration industry. I'm really happy to be joined today by Sean Wargo, who is Senior Director, Market Intelligence with AVIXA, as well as Peter Hansen, AVIXA's Economist, to talk about the state of the commercial AV industry today. There are two real experts in how macroeconomics affect the commercial AV industry as a whole, as well as how vertical markets are performing, how technology solution areas are performing, and essentially how integrators can optimize their business positioning to take advantage of or to respond to the economy as it exists today. I think you're really going to enjoy this podcast. Thank you for joining us on AV Plus.
As always, please like and subscribe to our YouTube page. And please subscribe to the AV Plus podcast on Apple and on Spotify.
So happy to be joined today by Sean Wargo, who is AVIXA's Senior Director of Market Intelligence, and Peter Hansen, who is AVIXA's Economist. Thank you so much, Sean and Peter, for taking some time to chat with me during what is obviously a very, very busy time for the AVIXA team in the run-up to InfoComm 22.
Great to be here, Dan.
My pleasure.
So let's get right into it. I think you both know I love chatting with you because you always, talk about things that I find incredibly interesting, which is how macroeconomic trends affect our industry and just the data of our industry, the verticals that are growing, the technology solution areas that present the most potential. So I want to get into all of that during this AV Plus podcast. But for now, I just want to start with kind of a macro level assessment of the economy. I mean, we're shaking off pandemic related woes, I think, but we do still have pretty robust inflation, probably about 8%, something like that, and interest rates that are rising and probably are going to continue to rise as the Fed tries to tamp down inflation. So what is your macro level assessment? Are we in a good place? Are we in a difficult place? How much pain is ahead or how much promise is ahead?
We were in a good place previously. We are not in as good a place now, more of a medium type place. With the addition of new shocks, I want to reference the Ukraine-Russia war and all of the sanctions that has precipitated, with the challenges that China is experiencing enforcing its COVID zero policy, with the continuation of inflation and the need, for the Fed to follow its statutory guidelines to maintain price stability and stop that inflation. These are all headwinds that the economy does not need, but has to be facing, right? It is facing right now. So where are we? It's not a bad place precisely yet. I mean, we're not in a recession. We did see GDP contraction in the United States in Q1, but from, reviewing the numbers and my read from other experts as well, people who really specialize in this forecasting, a bit of a blip. There's some inventory adjustments that are a major contributor to that. Some trade deficit numbers, that's probably a short-term thing. We're not seeing that turning into that second quarter as well, but it's just not as strong a situation. And I think, probably people are seeing that in the headlines about financial markets as well. Not a great March, not a great April, especially in the tech sector. Expand the window, look back through 2020, 2021. It's not like we've had, years of gains wiped out, but we're now in a medium situation. It's not all bad, but there's recession risk. We've got three major wins that I cited. So not as good as we'd like. That doesn't mean that it's not necessarily a good environment for Pro AV. As we'll get into, Pro AV has its own tailwinds that are pushing us despite what we're seeing macroeconomically.
And I want to get your perspective on everything, Sean, but since I have you talking about this, Peter, just out of curiosity, what would you put the odds of a recession are at in the next year or so?
Next year or so, I think I'd put it below 50%, but barely. We'll say 45%. That's higher than it's been really at any point recently. It's a very tough situation to predict recession. There's Larry Summers is this commentator with big platform. May have heard of his name. He was been in the White House, talked about as a possible candidate for the chair of the Fed before Chair Yellen got the role, and he posted a model that he ran that says something like 95% chance of recession. But here's the thing. We're in a situation where we're recovering from a pandemic, a massive global pandemic, which governments worldwide, and especially the United States, responded to with massive stimulus to facilitate a very fast recovery, which has caused some inflation problems. Add in the war between Russia and Ukraine, Russia's invasion there. Add in the COVID-0 problem, the threats of even future COVID waves. This is not a situation where you can look at the past and then build a model and then say with accuracy, here's what's going to happen in the future. We're in an unprecedented situation. No one can be too confident about what's going to happen in the next 12 months economically. I'm absolutely higher on the risk of recession than I have been at any point in my time at AVIXA. But beware of anyone who's being too confident. Anyone saying over 75% chance of recession, maybe, it might happen, but we're in this really unprecedented scenario. So you can't be too confident in any direction. It is a challenging situation though, and we are facing higher recession risk than the kind of past decade, at least.
Anything you want to add, Sean, in terms of the overall assessment before we kind of dive into commercial AV specifically?
No, I think Peter puts it fairly and is fair in his assessment of kind of where we are. I think the thing that people point to as perhaps the bright spot, right, is unemployment is very low. So the thing we've done well, largely due to stimulus and other recovery mechanisms, is bring people back to work. That cuts both ways, though. I mean, as we're seeing low unemployment, more people with jobs, wage growth, all those things can be good. They can also present challenges from an inflationary standpoint. But I would say that the bright spot there is we do have people kind of coming back to work. That is helping us kind of maintain at least some positivity. How that impacts us is kind of a different story, which gets to the rest of the questions of kind of where we are. Notably, Peter did not mention, supply chain challenges prior to this point. We were focused a little bit more on supply chain issues as a bigger issue. That would be the headwind in front of us. So we've got lots of growth, we've got opportunity for sales, but our market is facing the challenges of the supply chain. I think all the things noted perhaps exacerbate that to some extent. War with Ukraine, COVID restrictions in China, all that sort of stuff makes that a further headwind for us. But yeah, it's great. In fact, these conversations offer Peter and I a chance to even catch up on where we are internally, and this is evolving quickly. I think that's the point, is that the data has continued to become a bit more challenged. We're all seeing that in the stock market. We're seeing that in the VIX, the variability indexes for the stock market, that just we're in more volatility. People are a little less sure of where we were, which makes any kind of true prediction very difficult to make, and lowers the confidence interval in that prediction. So, I think where we have to focus is, of course, what's in front of us as an industry. Where can we go from here? What are our opportunities? What are we seeing from our own data, as we're going to talk about today?
So, and one piece, Dan, I would just like to add about the recession threat. And again, not too much confidence here because, like I said, unprecedented situation. But I do think that in the event of a recession, we're not looking at the kind of recession we saw back in 2008, 2009. Or the kind of downturn we saw at the start of the pandemic. Might be a little bit more like we saw in the early 2000s. A couple of quarters of consecutive contraction that meets the sort of classical economics definition of recession. That absence of growth, a little bit of contraction, but not the sort of thing that is a calamity. Just the sort of thing that makes the economy a less pleasant place for a year. For 6 months in particular, and then a bit of time for the recovery, and then we're feeling a bit normal again. Again, not too much confidence there, but I think from my read of the signals, from my read of expert analysis, it's about, even if we do see a recession, we're not in line for the type of really tough recession that we've seen the last two recessions.
Well, that's certainly, heartening to hear. So let's get into what you had mentioned, Sean, which is some of AVIXA's own data. I know you are kind of the crown, the champions of data about the commercial AV industry. You cut it across so many different matrices, solution areas, and growth in APAC and EMEA and the US. So would you say, obviously there's uncertainty, as you say, the uncertainty intervals are off the charts right now, but are you fairly confident that we're in a position to grow? And do you have any data that you can use to quantify that? We specifically in our industry.
Yeah, all of this is very well timed for us because we start our forecast update process really in the November timeframe for the year to come. So we've been collecting data, testing assumptions, watching economics outlooks, all that sort of stuff since last November. And this is the point at which we're reviewing models, looking at the data, kind of fine tuning it based upon the late breaking information as much as we can. It's always it's a bit of a dance because you're trying to not get overly lured by very immediate data trends. You want to look at kind of longer term data trends. Inflation is a good example of that. You have to put a flag in the ground when you do a forecast and say this is where we think kind of inflation is and will go from that point in time. So what we're seeing is we've been watching across a lot of data sources, whether it's our quarterly demand study that we do and also our monthly sales index. And both of those have been very, very positive for AV, which is telling us as companies have returned to in-person activity, whether it's work, play, learning, all the things therein, that has helped our industry recover meaningfully. Don't forget that the recession, the previous pandemic-induced recession, was largely and very impactful to us in particular as a sector. We bore a lot of brunt of that in areas like live events and fixed install entertainment systems, those kinds of things. So as those have returned, as COVID restrictions and guidance and return to activity has happened, we've been able to benefit from that. And so we're still kind of coming out of that. So growth for us, I won't say it's easy, but it's a little easier to find when you were coming from a very low point, when you saw 60% declines in live events, 40% declines in performance entertainment in the 2020 timeframe. So we're benefiting from that recovery. We're watching end users reinvest in technology solutions to support in-person activity and continuing to adapt to hybrid models, whether it's hybrid workforce, hybrid learning, et cetera. So all of that is tailwinds for us. Is it enough to loft us through recession? That will be the question. I think our current models, as I look at the draft that's in front of me now, suggest that 2022 does grow pretty meaningfully for Pro AV, that we are able to say buck the trend a little bit of the top line recession as we kind of recover from our previous period. But if we are to see major contraction, and so this is where Peter's comments about severity of recession become really important, because the more severe, the wider reaching it is for an economy, the deeper it takes its toll on all sectors. Though I would personally submit, based upon data we're seeing and the forecasts that we have coming together, that technology, despite NASDAQ currently, technology has been a benefactor of kind of where we are behaviorally, new norms, changing norms, all that sort of stuff. And so I think that helps us. Does it get us to the double-digit growth that we originally and are kind of still thinking is possible for 2022? That'll be the question. But my guess is if anything, it pulls us maybe still into the high single digits of growth for 22. 23 will be the harder year to forecast, though for now we are still expecting growth in 23 as well. So that's kind of what we're looking at. And the unexciting part about this, the kind of easy to talk about side of this, is really just the recovery story. Is that we've all been talking about recovery and return to in person now for quite some time. And it can sort of start to feel like old news. But it isn't old news because we're still not to the point where we've exceeded the peak set prior to the pandemic. That's the kind of moving target that we've been watching. I'm optimistic that that target is 22. I do think that based upon where we are in relieving pent-up demand, kind of still ahead of the bulk of the recessionary risk, yes, facing supply chain challenges, whether it's materials or human resource, I think that 22 is the year. I think we get back. And part of the reason for that is we're starting to include some areas of technology for Pro AV that we hadn't necessarily paid as much attention to in the past. It's things like we're living right at this moment with Zoom calls, Teams utilization. That licensing and opportunity helps Pro AV to some extent and flows through integration to some extent. So that being part of our models as we go forward also helps the story a little bit.
And I would just add a couple of numbers, kind of some context from our data about this to that just really supports Sean's remarks here. I said, in response to the first question that Q1 GDP in the US shrunk. Now, the parts of the economy that kind of drove that shrinking aren't overly relevant to Pro AV, but it was not a good quarter for GDP growth. Now, what did we see in our Pro AV sales index? Record growth. So January, February, March. So March, that's Q1. March was the single month record for Pro AV expansion in the history of our index. It goes back to 2016. It's a long history. That's a remarkable result. Okay, and then February, March, April, that was the 3-month record high expansion. That's in the context of mediocre growth in the US, better growth outside the US, but definitely not a spectacular global quarter. 2021 had better growth as part of the recovery from the pandemic, but not for Pro AV. And that's because of that return to in-person that's starting to happen now. Even in the comments from the April results, I was seeing lots of people talking about how booked out their live events were, which is really I think that final step that okay, I'll travel now that I'm vaccinated and maybe stay out of crowded areas. Okay, I'll go into a museum if, maybe I'll leave if it's too crowded. Going back to a live event, going to a concert where you're just surrounded by people, that's a sign of true confidence. I mean, that's the last place I think, no matter what your comfort level is, that's sort of probably the outer limit, where you were going to go to last as your comfort level increased after the pandemic. So to see that positive sentiment starting to spread to that area, I mean, it's really reflecting the tailwind, seeing record Pro AV growth, even when GDP is kind of flattened out from its initial massive recovery from the pandemic. That's showing what return to in-person means for Pro AV.
Just a couple other metrics too, Dan. So I mentioned our quarterly demand study that we do. It has less historical data within it at this point. We started it actually last year. But what we're seeing within that study, which asks essentially end users, starts with this capital expenditure idea of, are you resuming projects? Are you planning projects for the coming quarter? Since we started it last year, every single quarter, we see a higher and higher percentage of our end user decision makers in the study saying they are planning projects. Even more important, they're saying that those budgets allocated represent increases over the same period last year. Last piece, we show that a very strong percent of the planned spending goes to AV. It's high historically. We normally, in a CapEx type of model, you wouldn't expect to see much above 5-6% points, but we're seeing closer to 20, 30. What that tells us is, part of it's the sample, but part of it is also that technology is a big part of the investment. It's a growing part of companies trying to adapt to changing behavior. So all of that means that, yes, as we've been kind of talking about, if you look a year ago, 2 years ago, we come from a deep trough. 21 was starting to improve. But as we go into 22, the data is showing us that there's even more investment in these areas. Now, I'm very, very curious about the data that will come out next month in June to represent our Q3 expectation for capital expenditure and some operational expenditure, because we'll want to note, as is often the case with sentiment types of studies, you would expect, like with consumers, you would expect perhaps end users start to say, hold on, maybe I need to hedge a little bit. That's certainly what they had done in prior year in 2021 early on, is there was still a little bit of a hedging. And that sort of came loose as we came out of 21 and into 22. So that data will be really important to watch. Just like the index that Peter's talking about and other things that we have at our disposal. So we're kind of we're staying tuned to, very closely to our TV sets, if that's still a thing, to watch for how that might change going forward.
So we've talked about a lot of conceptual stuff that's super, super interesting. But now for our integrator audience, I want to make sure that I kind of concretize it for them. And the way I think I can concretize it is to say, as you say, we came from a deep trough with some of these verticals, like, the live event segment. I think you said, Sean, it went down like 60% during the pandemic. So when we talk about growth, we need to think about growth in the context of a wildly depressed kind of a year. And I think solution areas, obviously, like, conferencing type UC&C solutions, rose dramatically during the pandemic because everyone had to become conversant with those kinds of technologies. So as integrators look at 2022, as they look at 2023, what would you say contextually the verticals are that present the most opportunity, the solution areas are that present the most opportunity, that aren't being masked by the fact that it's gone from a trough back to normalcy, but that actually do represent fresh, good opportunities that integrators should say, I should pivot my business toward this because this has real sustainable growth potential?
Yeah, it is interesting because you have to kind of cut through the noise a bit of, return in person, which means things like in terms of our vertical market segmentation, it's venues, it's hospitality, return to travel, it's media entertainment, so sort of broadcast and facility kind of investment. So what is interesting though is you look at things like infrastructure, energy utility, government. What is still true, particularly here in the U.S., where we had infrastructure bills being passed, we have desire to reinvest in communities a little bit, and that sort of stuff can be places where you wouldn't have expected investment to continue, but those are ones that we're watching. Transportation hubs, energy utility, government, those kinds of things. Those are seeing some good growth. Beyond that, the other logical suspects would be corporate education, which are, of course, they did fairly well during pandemic. They're some of the largest. Corporate is the largest vertical market, has been for Pro AV since we've certainly been tracking it. And I think that's a testament to the need for continued waves of investment to adapt to what's going on and an improvement upon it, particularly in the case of higher ed, where we've heard a lot that higher education institutions here in the U.S. particularly, they made their initial rounds of investment. They prepared themselves technically for remote and hybrid. And, some of those investments now need to be perhaps improved upon, particularly as they get a better handle for their roadmap going forward. So we kind of expect that investment will kind of continue as we go into the coming years. So it's hard though to not say, because we're hearing certainly from live events, the latest Pro AV Index study had quotes from the live events community talking about, gosh, now everybody wants an event. So does the pendulum swing way back to where companies that might have pulled out of that space kind of reinvest back in that space a little bit from a provider perspective? So it wouldn't be entirely fair to say just because it's a recovery story doesn't mean it's the one that we shouldn't focus the most on, particularly given that government, transportation, energy utility, large projects that are long sales cycle can be hard to get into the mix for without connection. So, it can be beneficial to kind of focus where perhaps the easier targets are, the more the targets that the companies are already connected to, the integrators have existing pipeline into those businesses, which certainly is corporate, education, hospitality as well. Retail will be interesting to watch. Recession there, depending on what consumers do, especially given inflation, will be kind of interesting to watch. We had seen in our demand index demand study in the latest quarter, retail was one that rose right to the top in terms of planned investments and allocation to AV and all that sort of stuff. So, but that can be vulnerable if we go through sort of recessionary period as we go forward. But so it's kind of, that was an all across the board answer, but it does show that there's a bit of opportunity in a lot of places. And I think, Peter and I have talked about since the very beginning days of the pandemic that this whole situation has reinforced the notion of diversification. It's just, the more that companies can kind of not overly focus on one area and think about how they can gain access to new ground, new opportunity is just key to surviving the waves. I mean, if anything, a recession maybe is less scary when you've just come out of a very tumultuous period and you've kind of learned how to be flexible and adaptive. So those skill sets and muscles that have now been exercised and perhaps more developed help companies to be able to find that opportunity across verticals, across solutions, across products going forward.
Any thoughts you might want to add, Peter, about ripe opportunities, be it technology solution areas or verticals?
Yeah, that question, Sean's remarks got me thinking about actually research that we did right at the start of the pandemic. The first meta report that we authored after the pandemic just asked the big question, looking back actually at previous global catastrophes. I mean, the Spanish flu, Great Depression. I remember reading one paper in particular about the Spanish flu that was written by an economist, just asking the question, how did society change? I mean, what was it like in the flu pandemic, which was a 2-year pandemic, like kind of looking kind of similar to what we've experienced here, and then what lingered. And what he found, and this is pre-pandemic research, years like 5, 6, I think it was 2014, something like that. So like not done in the context of any motivated reasoning, any kind of hopeful, wishful thinking based on our own current pandemic. But what he found was that society just bounced back, that there were tons of behavior changes during the pandemic, but those behavior changes reflected the conditions at the time, and that when people regain their comfort levels, they return to their normal activity. And so what that kind of has, the implication from that for right now is that we could be, probably that suggests that we're returning to fundamentals of the pre-pandemic economy. So I would just say, take a look back at like what you were thinking in 2019, big trends, what mattered to companies then, because 23, 24, 25, what trends are going to matter in those years, there's a good chance they look like, 2019, but like 2-3 years in the future. I just at ISE spoke at the Control Room Summit. So that's kind of fresh in mind right now. But some of the trends there, and I was looking back, doing some of my research to prepare for my remarks, even the 2020 Control Room Summit, which was like right when we were first hearing the words COVID-19, but things like AI, VR as a part of like training and space design there, and things like remote technology, control rooms for remote control in like transportation on like train lines across big space, or manufacturing, mining in dangerous circumstances. We kind of seems like some of these topics that are super cool and neat and potentially very important applications of AV, we've been talking about less over the past 2 years. We've been talking about these big societal trends. And I think we're going to start talking about them more. There's going to be areas of focus going forward. So I would encourage integrators to think about what was important, what were the leading trends in that lead up, 2018, 19, and the very first 2 months of 2020, because I think those are the ones that we're going to start hearing a lot more about again in the next couple of years, and are going to be driving a lot more of the growth in 23, 24, 25, 26.
So hopefully this conversation has whetted people's appetites. I'm sure that they would like to know more about what AVIXA has discovered in terms of vertical market data, technology solutions data. I believe at Infocom on that first Tuesday afternoon, there will be a lunch where you're going to dive deep into the state of the commercial AV industry. Can you share with our audience, if they're really interested in finding out more, how they can participate?
Absolutely, you're right, Dan. So Tuesday, Peter and I will be getting on stage to share the latest of our forecast update, the 22 IOTA, what we have available in our demand studies, and of course, index and other meta macroeconomic research that we've been putting together. So that is Tuesday at noon. You would want to come to the Infocom website because it does require special registration to attend that. So, and it is limited seating. So make sure to book that early to get a seat. It's a full hour with us, chance to ask questions, network with peers. So we certainly look forward to getting back in person and sharing some of our data to discuss what the outlook for Pro AV looks like.
Yeah, and I'd say, I think one piece of those remarks, right now we're working on our second quarter meta report, which is going to be on the subject of supply. We've done quite a bit of data gathering to understand what the AV industry is experiencing right now. We're composing that. So a lot of information that's going to be coming from us in a meta report and probably also at that lunch.
Well, I really appreciate the time, Sean and Peter, joining me on the AV Plus podcast and just kind of piquing our interest for what you're going to be sharing that Tuesday at Infocom. It's always super interesting to have you on and just to see where we stand macroeconomically and in terms of our little Pro AV universe, or not so little Pro AV universe, exactly where we stand relative to everybody else. So thank you so much for joining me.
Thanks, Dan. Great to be here.
And incidentally, I'm always tempted to call you the commercial AV industry's Kudlow and Kramer. So thank you for joining me.
Thanks.
And we can get offline and decide who's Kudlow and who's Kramer.
Sounds good.
Well, so again, thank you to Sean Wargo for joining me. You are the Senior Director, Market Intelligence for AVIXA. And Peter, who is AVIXA's Economist. Again, thank you for joining me. My name is Dan Ferrisi, Editor-in-Chief with Commercial Integrator. Thank you for tuning into the AV Plus podcast, and please check in next week for more great content on AV Plus, just like this. Thank you.